I have to record this video again because I had my desktop audio on and it ruined everything. So, multi-time frame analysis. So, what is multi-time frame analysis or multi-time frame confluence? So simply putting it, it's just the usage of multiple time frames to confirm a trade setup, okay? So the reason why it matters, or the reason why you want to use multiple time frames, preferably higher time frames, is because it can help you avoid false entries. It adds conviction to your trades, helps you filter noise. You know, you're not looking at the lower time frame, falling in love with every single move the lower time frame makes. And also, it allows you to catch bigger moves. You're going to catch those expansion moves, right? Now, there are multiple time frame alignments. My favorite three are the daily to the 1 hour to the 5 minute, the weekly to the 4 hour to the 15 minute, and then this is kind of one that I don't think I made it, but it's just something that I played around with. The 4 hour to the 30 minute to the 3 minute. That's personally my favorite. Now, the first step is understanding each time frame's role. So today we're just going to use the daily to the 1 hour to the 5 minute. So the daily time frame is going to be your first step. It's your highest time frame. You always start with the highest time frame first. The daily time frame is your storyteller. Okay? So the daily is where you're going to find your overall market trend. You're going to ask yourself, where is the market? Where is the market drawing to? What is the trend? And are my conditions favorable? Once you look at the daily, you're going to move on to the hourly. The hourly time frame is your structure. This is how you know when the market wants to make its high time frame move. Ask yourself, where is the market? Do I have areas to trade away from? Do I have an established low of day or high of day? And are my conditions favorable? Once you have these two down, you move on to the 5 minute. The 5 minute is where you find your entry. You're going to ask yourself, do I have all of my triggers? Does my daily and my hourly time frame, do they give me what I need? Does this align with my higher time frame? Do I have an area to trade away from? And are my conditions favorable? Now, the most important question to ask yourself with all of these time frames is, do all of my time frames align? Without alignment, you are not going to get delivery. You're not going to get those big expansion moves. These time frames aligning is how you catch these big expansion moves. These 200 tick, 300 tick trades. This is how you catch those. You align all of your time frames. Now, how to stack these time frame confluences. So the daily time frame is obviously your beginning. You mark out your key levels. You find your bias for the day. Are we drawing towards previous day high, previous day low, previous day equilibrium? Are we drawing towards a fair value gap? Are we drawing towards a relevant swing? Just find your draw on liquidity. Now, I don't have this on the slide, but it's okay to use the hourly time frame as a draw on liquidity as well. You can do that. Just make sure that it aligns with the daily. Like if the daily's bullish, don't look for a swing low on the hourly as your target. That doesn't make any sense. So your second step is going to be your hourly time frame. You're going to mark out any confluences that align with your bias, preferably in the upper half or lower half of equilibrium, depending if you're bullish or bearish. So you're going to look for fair value gap, CISD, order block, whatever confluences you use to trade. So you're going to find levels to trade away from towards your drawn liquidity. If price lacks these, then you know it's not time for expansion yet, because price needs a reason to trade away from something to expand. Like it needs an established low of day to trade to the high of day. It needs an established high of day to trade to the low of day. If we don't have an established high of day or an established low of day, we're probably not going to get that expansion. Now, the last step is your 5 minute time frame or your entry time frame. So obviously, entry time frames, you're going to find your entry. Are you trading away from key level? Do you have a protected low or a protected high that you can put your stop loss at? If yes, then you know price is ready to expand and it's time to look to get on side. Now, once all three of your time frames align, you are ready to enter. And that is it. So we're going to hop into some examples. So the first example I'm using two examples that I took and also that I made trade recaps on. So now, oh, my drawings got deleted for some reason. Hold on. All right, so going into Monday, I talked about in the trade recap why I was bullish. So I'm not going to really break this down because it's not a trade recap. It's just a example, right? So we're bullish on the daily, right? So we need to find where on the hourly time frame that aligns. So at the moment, the hourly time frame does align with bullish price action, but it's 7 a.m., right? We don't want to take a trade at 7 a.m. So we go to the next hourly candle. We don't get this hourly CISD. It's also 9 o'clock. Market hasn't opened, so we can skip ahead to the next hourly. Now, what does price do here? So we have a very wicky candle, right? But what I see is us retracing into this hourly fair value gap and sweeping this relevant swing. And then I also see a hourly CISD to the upside, right? So to me, this is the hourly time frame aligning with my daily. We are bullish. This is my hourly time frame aligning. I have an hourly CISD. I have an hourly relevant swing that was swept. We react off a fair value gap. We have a nice little sweep here of previous hourly candle. So to me, this is hourly time frame giving me what I need. The daily is already giving me what I need. This is aligning with the daily, so we can scale down to our entry time frame. Now, this was a beautiful trade because 9:55. So this is right before a driver. 10 a.m. gives us our CISD to the upside, so you can go ahead and take this. This is literally the trade I took. And then you can target whatever your draw is. If your draw is just this swing high, then you can target that. And if it's previous day high, then you can go ahead and target that. Skip ahead a little bit. And let's say you did not get in on this. There are other opportunities to get in, right? So you could have gotten in when we got this CISD if you wanted to. Or you could have maybe waited for something like this. Get this breakout. You enter here. Really tight stop loss. Really tight TP. It's only 1 RR, but you know, it's a nice little base hit to take, right? And there you go. Would have been full TP, right? So there you go. That's the first example. Let's hop on the next example, which was actually today's trade. So going into the day on gold, I was bearish, like I said in the trade recap. Like I said, I'm not going to break these down like I would on a trade recap. I'm just giving you guys examples. So overall, the daily time frame is bearish. I have my 2 draws in liquidity. I have previous day low, and I have these swing lows over here. Now, the reason why I want to target past previous day low is because today was C3 on the daily. So I'm expecting expansion through previous day low to other areas of liquidity, right? So what do we get? We get a open high on the day, right? So if we're bearish, price opening high is beautiful. And what are we also doing? We're filling an hourly fair value gap, okay? So now we're really just waiting for the hourly time frame to give us alignment. So right here, we manipulate London highs, we trade away, we get this bearish hourly CISD. Oh, I thought they, okay. I guess that thing is only on mobile. But we sweep London high, we trade away, get a CISD. So this is our protected high or our high of day. So, okay, the text just, oh Lord. Yeah, this is our high of day. We have a reason to trade away from this. Swept London high, hourly CISD, protected high, right? No reason for price to return to this high if our bias is right, okay? So, but this is 7 a.m., so more than likely not entering, right? Now, retraces in this hourly CISD, we respect it, we get a close below previous hourly candle, so we're continuing bearish, we can expect continuation. So now we can hop on the lower time frame because we did have news at 8:30 today, so it's okay to enter before 9:30. Like I said in the trade recap, news gives us manipulation. After news comes out, to get this CISD. I did not enter off of this. I wanted to see a continuation, which we got right here. Get this continuation. This was my entry. I put my stop here. You could have put it here. It doesn't really matter. And then my target was this low. And there you go. Beautiful trade. I wanted to give examples that I took and also that I made a trade recap on so you guys can go back and watch the trade recaps. These two trades are literally going to be the last two trade recaps. I did take a break even on NQ because I went break even after we took this internal high. But in the video, I talk about why I shouldn't have done that. Yeah, so if you guys want to go more in depth on these trades, you can go ahead and look at the videos that I made. Other than that, that's it. That's really just how you align multiple time frames. If you guys have any questions, just let me know.